The Hedgeless Horseman here. It's October 31st, 2025. I actually did a video a few days ago which I haven't uploaded yet. I might upload it. It was mostly, or ended up being mostly, about standard stuff, value shuffling, and yeah, I mean dip buying. Why that's always the best. Anyway, thanks to the sponsors. I think, I don't know, Silver Viper is up here, which we're gonna talk about as well. First look at the market. Market seems to be, well, not doing much. Gold is, I mean, look how volatile silver is. Sure, I mean, these moves are not exceptional. What's that, like 48? Okay, so maybe it's not, I mean, it looks more volatile than it is, or the moves aren't as big as it looks, but you can see how, I mean, basically everything is so choppy. Short term, everything is chaos. But yeah, so gold is still holding on above 4,000, and again, I don't know if this is a bottom and we're gonna have let's say $4,000 hold up and just go higher, or if we're gonna go down to 3,800 or whatever. I mean, usually the market wants to get most people offside. That's just what happens. So I wouldn't be surprised if we might see 3,800 or something. But that's the thing. It's like, I don't know. I just know that many juniors, many good juniors, many advanced juniors with advanced gold projects, for example, they might be pricing in $2,500 gold or something like that. Some maybe $2,000 gold. So I mean, I don't really care. My bet is that I don't think gold is going to go to $2,000. That's about it. So I have a huge margin of safety the way I see it. That if I buy something that's pricing in, yeah, let's say $2,500 gold. Gold goes down to $3,800 gold. What I owned or what I bought is cheap, even if it goes down with gold. If gold bottoms around here, obviously very cheap. If gold goes to 3,500, still cheap. If it goes to 3,000, still cheap, etc. All the way down to maybe $2,500 gold, and which I actually covered in the video where, which I haven't uploaded yet, or maybe depending, maybe I upload that first and this actually comes later. But I just point out the fact that why we're still is the way I see it, and the same one for 2023, 2024, in a sense that we're beyond the point of selling. Stuff was so cheap that it made no sense to try to time the bottom. You just know it's going to be higher in the future, and of course that's what happened starting this year. That everything went up, and a lot of juniors are higher than they were 2023 or 2024. So simple as that. If you just kept on buying, the lower the market went, the more money you would have been making today, eventually. And of course, if you were down a lot, the more you bought, the lower it went. The quicker you went to green or plus minus zero. So dip buying, I mean, if it's a bull or if it's a bear, it doesn't really matter. You'll end up making more and losing less. That's just how it is. And of course, what's interesting then, if we just think from a game theory perspective, if let's say juniors are pricing in $2,500 gold today, and gold goes down to 3,500. I mean, I expect the gold juniors to sell off in that case, because that's just what the market does. So in that case, let's say they sell off, and they trade price in $2,000 gold. When gold is at $3,500, so they're still cheap, right? So what's if gold is at 3,500 and their price like gold is $2,000? That's a buy, right? So in a sense, my point is that if we look at it from a decision making tree or game theory perspective, whatever, I don't see a scenario where uh, we're not in a buy environment. Because the simple idea is that, again, especially if you're a value focused investor, because it's kind of simple that if gold is at 4,000 now, they're pricing in $2,500 gold. So they're obvious buys, like huge margin of safety. $1,500 gold. Gold could drop by $1,500, and today's purchase price would still be cheap, right? If gold goes down, juniors will probably go down and price in an even lower gold price, which makes them a buy, maybe an even bigger buy. So I don't see how, from here to, let's say, making money, I don't see how we get a sell out of it. The only way, really, that, let's say, good gold juniors would turn into sells at this price is if basically gold went to, let's say, sub $2,500 and the share prices of the gold juniors stayed put. So let's say the gold juniors were pricing in $2,500 gold and the gold price went down to $2,300 gold. All of a sudden, you're at least paying a speculative premium. You're paying for a gold price that's not here yet, which is $2,500 gold, whereas gold has dropped to $2,300 gold. How likely is that? I mean, does anybody think that the gold price could? I mean, it could be bottoming here, but how likely is it that the gold price goes down $1,500 and the gold units don't sell off at all? I mean, it's 0.0001% chance of that happening. So that means it's easy decision for a value investor because you don't really have to care about anything, because there's almost no way, if you let's say are a holder today or a buyer today and that position shows red, let's say it goes down 30%, there's almost no possibility that that portfolio will be overvalued at that time, and you have to take and monetize a minus 30% paper loss from these levels because all of a sudden they're overvalued and you shouldn't be holding them. I don't see that. I mean, the likelihood of that happening is, very low. And instead, you could have this scenario where gold, again, let's say, goes down to 3,500. Juniors go down and start pricing in $2,500 gold. Then there's still obvious buys. I mean, that's $1,000 margin on the gold price, let's say, as margin of safety. So screaming buys anyway. So easy. I shouldn't be selling because I'm expected to make money from these new lower levels. So if I wasn't a holder already, I should be a buyer. And if I was a holder already, I mean, again, there's not much to do. There's no hard decision. They're just obvious buys still. And yes, you take a paper profits, but you're supposed to make it back. Like everybody and their mother basically had paper losses in 2023, 2024, and then you made it back. It's the same principle basically, that sooner or later the market is gonna find its way to closer to the intrinsic value. It might take months, it might take years, but the point is that if you're on average right, you're gonna end up making money. And that's the thing. A lot of people, I think, they focus on getting absurdly good returns, whereas like 50% per year for 10 years is world-class type returns. And obviously 95% of people who are active investors cannot beat an index. So it's like you have no business really trying to get 500% per year or 100% per 2 months or something like that. Everybody that tries that is gonna just lose money. Anyway, so first some tweets. I mean, I'm not gonna include all, because I think I put up some, good tweets. If I don't mind me saying, just about market psychology. and important stuff. And what I find funny, I mean, there's a bunch of accounts out there. I mean, if I post a gold chart as like, hey, I think gold is going to go to $10,000 and draw some green lines or a green arrow, that might get 200 likes or something. That's, those type of stuff spreads like wildfire. Why? Because it's like it appeals to the 95% of people. Confirmation bias, and I'm like that myself. I like charts that basically make it seem that, oh, I'm going to be making a lot of money. So it's easy stuff to digest. You don't have to think too much. It's somebody basically saying, oh, you're going to make a lot of money, and you're like, oh, great, I like that idea, I'm going to like this. But when you since I most of the time nowadays put up stuff about investing theory and stuff like that. I mean, actual work, the hard yards, due diligence, how to think about, not just, oh, buy this shitco or buy that marginal producer, and don't worry, silver's gonna rip to $100 and you're gonna make a lot of money, easy peasy, no due diligence needed, no discipline needed. I just want to have, a easy, quick profit. Thanks for not letting me do a lot of work. I mean, my point is that, as you can, I mean, this has 3 likes, for example, and some stuff, 2 likes and all that. So I'm very bad, I guess, at self promotion, or let's say generating more followers, and that's what I find funny. That I mean, look. The best example I can find, I think, is like all the Bitcoin accounts, all the maximalist Bitcoin accounts. I mean, there's almost no account that doesn't have at least 50,000 followers. Some might have 300,000 followers, and I mean, and more than that. And all the content is only reasons why Bitcoin is just going to go higher. Sailor says Bitcoin is going to 1 million and stuff like that. I mean, it's brain dead stuff, but it's kind of clickbaity, and obviously, in my opinion, that's what Bitcoin crypto is mostly about. People believing and thinking that there's a really easy way to just have endless returns. It's like when Sailor says, oh, I think Bitcoin is going to average 50% per year or 30% per year over 30 years. I mean, that's great. 30% per year is like superb. Oh, I only need to own Bitcoin and I'll make 30% per year. I mean, which is obviously a lot better than the stock market averages over the long term, because that's like 9 or 10%. So it's very appealing that it kind of checks all the boxes. It's labeled as safe as gold. You're gonna beat the stock market by 3 times over the next 10, 30 years, while owning something that everybody says is basically as safe as gold. So it's kind of risk free, very outsized returns on at face value, which is of course why it's, I mean, in my opinion, a big bubble, and at least that mentality is a big bubble. It's there are no free lunches. It's like gold. It goes up around the as much as inflation on average per year over the long term. There's no free lunch there. You just keep your purchasing power. But Bitcoin is basically supposed to do everything. Be safe as gold, protect you against deflation, inflation, and you're also going to have a 30% return. Sure, that's nominal return, but my point is that it kind of promises to be everything, and that's great, because that's how you get yourself to go all in something. If you convince yourself that it's risk free, plus it's going to beat almost every other investment, I mean, why wouldn't anybody be all in, right? But if you post stuff about the hard yards, it's like, think about this concept, and this is just one of 1,000 things you can ponder. That's not really that appealing to people. And again, it makes sense. Most people are after easy, quick money. Anyway, the point of this graph is just to, and I'm guilty of this myself. You forget about stories when they're not exciting or when they haven't put out news. And when companies don't put out news in a long time, I mean, at face value, at surface, it looks like nothing is happening. Because the idea is, well, it's you for some reason intrinsically feel like work only happens on news days. That a news release actually created something. That's when the work happened, that's when the progress took place and all that, which of course is not true. It's just that it summarizes and makes it public what has happened. So what's interesting is, of course, that the longer time a company has not put out news, there's going to be a bigger boredom discount. Investor interest goes down with the share price. And what's ironic about that, and we're assuming this is a actual good junior in the sense that it's a serious management team, competent management team who just not just rolls their thumbs or rolls their fingers and takes out a salary. They're actually doing productive work that's just not telegraphed yet because there's no news release. So, I mean, if the next news release is like 2 months out and you don't necessarily know that, for every day that there's no news, more work gets done, right? And if we're assuming it's a good, whatever, competent management team or et cetera, et cetera, so we assume that the value creation curve is up for that company. That means on average, the longer time there's no news, the more value, hidden value will have been created that is not yet known about. At the same time, share price tends to go down. As the longer the wait to news, the more the share price gets discounted by people getting bored, which opens up obviously the interesting opportunity basically that you're buying. The longer it takes until next news release, the more work, the more potential value creation that's not public yet you're buying for a lower and lower price. And that's why, I mean, sometimes you do see some, share prices go down and then some news comes, which is not really, shouldn't be a surprise that there's going to be news, but it's a surprise because of the market feeling like there's never going to be any news again. And then you have the, revaluation basically. And of course, the longer it takes, the lower the share price tends to go, and the longer it takes, the closer you get to the actual next news release that summarizes all the increasing amount of work that's actually been done while the market thinks that nothing's happening. So that's an interesting concept right there, and I get fooled by this myself. That's why I keep saying, refresh your conviction on cases, because when you're not excited about a story because you haven't had anything to be publicly excited about, because there's been no public news, you start to forget why you were excited in the first place and what the fundamentals are. And then I don't know how many times I've actually ended up selling something that hasn't put out news in a long time maybe, and I find something else that's exciting that just put out news, for example. And of course that's the reason why share price keeps going, because at this point somebody's boredom breaking point is reached and he sells, drawing the price lower, and more time passes and that breaks someone else and breaks someone else, and then you have a bunch of weak hand, scared money, etc., who just, and that's most people looking at the share price trend and see that, well, I'm not making any money here, so I've got to sell and buy something that's actually going up. It just, it's the spiral thing, which is which the market is known for, and it's always going to be like that. But think about that actually. I mean, I find it very interesting. Uh, yeah, I mean, if there's a lot of different strategies one could have. I mean, it would be fun to just, you just keep track, let's say, of all the intact stories that haven't put out news in a while. but they're clearly doing work because they're a competent team and all that, and you just look how cheap they become, and all of a sudden news release comes, and sometimes it's like news that almost everybody knew was going to come, but 2-3 months ago, and then it acts as a surprise because everybody actually forgets that that work was always going to get done. Also, one thing I think is again really important, and I try to remind myself of this, that this is Lundin Gold, and as I write here, almost every single buy or sell you do will look ill-timed within a few days or weeks. If you bought, it's gonna be the share price is gonna be lower and show a loss on that buy within a few days or a few weeks. If you sold, it's probably gonna be for a time higher within a couple of days and weeks. So I just pulled up one of the best success stories, one of the most relentless uptrends I could find, which is Lundin Gold. And I've tried to basically circle all the, and that's not a lot of them, I try to circle the time periods or days where if you, and again, this is a raging bull trend, a relentless bull action in upward trend in Lundin Gold. And I've tried to mark basically, and of course I probably missed some, in between, etc. But still, where the only places you would have bought one of the most relentless upsloping share price trends, one of the best performing companies from a share price perspective, within a couple of days or within a few days or weeks not showing a loss on that buy before you actually show a profit. That's not often, or that's not a lot. Well, actually, here I miss some, for example, because like when this share price reaches this level here, and this is actually a few months, but that might actually make it worse. So in that case, it's like, well, if you bought here, this one I missed, this one I actually missed. So 2 extra days here, for example. But every other buy here, this is going to show a loss within a day. This is going to, depending on when you bought it. But within a couple of months, you're going to be basically red on every single buy up here. And down here, you're going to be red on almost every single buy here, except if you bought the low, intraday low here. And it just keeps going, basically. So as you can see, and the point that I'm trying to make is that, which I think I tweeted, assume every bad, good, or even great buy in hindsight. Obviously, if you bought here, show a quick loss, just 1 or 2 days after, and then even more of a loss, a week or 2 after. Up here, that's gonna look like a really good buy, right? But that's in the short term. You should kind of expect to look dumb on every single buy or sell decision you ever make. Because as I saw, or think of it this way: how many people do you think actually buy dips? How many people buy downtrends? You could make a line here, maybe, oh, this is broken the downtrend. For example, or obviously the trend is short-term trend is down. How many people do you think catch falling knives like this? Here it looks like a cascading effect. How many people actually are capable of buying this bottom? So the only real times here, if you put it in practice, is like how probable is it that you're gonna ever make a buy that's never gonna look stupid? Or that you're not going to look stupid in soon, unless you unless you catch some of these runaway moves, for example, and it actually does. I mean, here you have gaps, for example, so a lot of the time it might trade down to that, and that's what people are going to say at least. So it's like, yeah, okay, a few times here, a few days here, one gap here, and again, these are gaps that doesn't get filled, and a lot of the time in other juniors, or especially juniors, people can fuck around with. I mean, traders and stuff. That's probably gonna happen more often. But it's like, soak this in. The fact that assume that every single buy or sell you're ever going to make, especially in the junior sector, is gonna look dumb within a few days or a few weeks, and that's totally okay. Because think of it like this: how often do you buy something, especially if you have low conviction or somewhat low conviction? You hold it for like 3 weeks and you're red on the position. And the day you're red on the position, you're gonna be thinking, "Whoa, I've held this for 3 weeks, 3 whole long weeks. I'm still down, or I am down. So obviously I was wrong, and I'm gonna sell out." It shows also how important conviction is, because if you think the market is out of its goddamn mind and it's wrong until you change your mind, you're gonna be looking at it like, wow, it's incredible that the market can be this wrong, but I'm gonna keep buying, and then you will at least buy dips, right? But think about that, incorporate that, assume again, you assume that even the greatest buys in the greatest stories, you're gonna 95% of the time you're gonna look stupid before you look smart. Some news. Inflection outlines large-scale copper gold targets on the endurance projects Northern Territory. So this is the East Tennant project package, which they acquired from Newmont for, I think, 1 million shares, and Newmont's get a net smelter royalty. Located in Australia's Northern Territory, consists of 1,200% owned licensing. I mean, a huge land package. IOCG deposits are among the most metal-rich mineral system globally, with Australia's Olympic Dam, Prominent Hill, and yada yada, and the Ernest Henry Mine, Evolution Mining being major sources of copper in Australia. IOCG deposits are attractive exploration target due to their large scale and byproduct potential, which includes gold and potentially uranium, which can greatly enhance project economics. I mean, Olympic Dam is one of the largest. I think they covered that in this news release, if I'm not mistaken, that Olympic Dam is like, I thought it was in this. Yeah, here. Olympic Dam is one of the world's largest known deposits of copper, uranium, gold. 10 billion tons of 0.26 grams per ton AU and 0.6% copper. Oh, and plus ore reserves of 591 million tons, and it also includes uranium, etc. I mean, 1 billion ton is a big deposit. This is 10 billion. I mean, it's basically as world class as it can get. So let's go with the comments. We are excited to have completed acquisition of this large portfolio of copper gold projects in Northern Territory. These assets strongly complement our ongoing programs in New South Wales and reinforce our strategy of drill testing large scale, high impact copper gold systems with tier 1 discovery potential. With the exploration license now formally transferred, we are actively advancing target prioritization through the compilation of existing projects and regional scale data and engaging with Aboriginal stakeholders. Inflection's exploration strategy will continue to apply mineral system approach, utilizing highest quality geoscience to unlock. I mean, as context here, Inflection has Douglas Haynes as a technical advisor, and he was it was his brains basically behind the New South Wales portfolio. And Douglas Haynes is who was one of the discoverers of the Olympic Dam IOCG deposit in Australia. So obviously that guy is absolutely top expert on IOCG systems, and Stuart Smith, I believe, is also very well versed in IOCGs. If I'm not mistaken, he has worked IOCGs in South America, for example. And then you have Fraser, who's I think is on the board of Inflection right now, and he was I'm pretty sure he was let's see here, former Newcrest Mining's global head of exploration, and it was Newcrest that generated these targets. And I've talked to Alistair, and basically, if I'm not mistaken, Newcrest generated these IOCG targets when Fraser was head of global exploration for Newcrest. And Newcrest were obviously no dummies. I mean, you can look at Newmont today. Basically, all their tier one long-lived assets are Newcrest mines, and that's obviously why Newmont acquired them. Newcrest was one of the big success stories in this space, so they were very competent at finding stuff and mining stuff. Right? So imagine, I mean, it's crazy when you think about it. It's like, imagine you started a junior. Let's assume Inflection has nothing else than this. So you have you're a grassroots explorer, and you're like, okay, what's our portfolio? Well, we have 4,200 square kilometers in Australia, and our grassroots targets are 16 target areas. I think it's 16. It's 1, 2, 3, 4. Well, you can just count them. 16. Yeah, 16 target areas. And that's one thing. It's the same with New South Wales. Every one of these targets is not necessarily a target. It's multi-kilometric target areas. Because like their modus operandi has been Inflection, they're only looking for tier 1. So they don't care about small IOCGs, they don't care about small, let's say small porphyries or whatever. They're looking for large scale potential. They're looking for, let's say, clusters of porphyries or maybe clusters of IOCGs, etc. Because they tend to also, as far as I can tell, show up in clusters like Lundin Mining's I think it's the Casarona mine, or is it Candelaria, or is that the same thing? But anyway, there's multiple deposits. So they're looking for they have this filter, of course. I mean, Inflection, when they generated the New South Wales original project package, they were using a filter where they only want large targets, because that's what the major are interested in. Newcrest was a major, so obviously they're only interested in major major potential targets, because they are a major themselves, or were a major themselves. So like, when you think about it, it's like, what is this? How many juniors have, or I should say 99.9% of juniors have 0 Newcrest mining generated targets. This is the Newcrest grassroots IOCG portfolio in the Tennant area of Australia. And again, if I'm not mistaken, I think they only drilled a handful of holes across this entire project package before then doing, I think, IP, and before they even could use IP for follow-up drill. I mean, you obviously can't test 16 target areas with a handful of holes, so it's obviously just, let's say, the start of something. Then Newmont acquires them. No work has been done basically since then. So I don't think even Newcrest got to drill any of their targets here with IP in hand. And Inflection has all that information. So they have more information than Newcrest had. And then one can is like, okay, but why is Newmont, a agree to sell, for example. I mean, one big thing I would assume is that they they can tell that, as is typical with majors nowadays. I mean, they do much of the farm out exploration, especially grassroots, to juniors because they don't have the bandwidth anymore. And Newmont is like, why would Inflection be able to pick this up? Well, look at the people involved in Inflection, and look at, you have Fraser, etc. I mean, Inflection might have better IOCG experts than Newmont has, or at least on par with them. So I think they're very comfortable knowing that if anybody or if any team is gonna be able to make a discovery here or discoveries here, it's gonna be a team like Inflection, because Inflection has one of the most impressive technical teams of any junior I've ever seen. So I mean, again, if we just take a stand back and it's like, how would you rate this grassroots portfolio versus the junior sector, or the average junior? I mean, this is like, I would say, orders of magnitude better than any average junior has, any grassroots junior has. And you have, it's in Australia and all that. It's large scale tier 1 targets because it was Newcrest that generated these targets, and Newcrest was a major miner. And they are all fresh. I mean, honestly, even if you threw away I mean, I would kill to have this portfolio. If I started a junior, a grassroots junior, and I had this, I would be thinking like, holy crap! I got 16 cans to kick, and Newcrest identified these cans because they think there's potential for a Newcrest size price. So what this portfolio alone should be worth, I don't know. If Inflection only had this and would be trading in the public market, anything lower than 30 million CAD I think would be cheap, very cheap. I mean, you can just compare to other grassroots juniors who don't have nearly as good of a land package, and they might have 30 million market cap. And some of these targets are, here you have Ernest Henry Mine, Mount Isa. I mean, these are really big targets, and again, apparently, I mean, there's the different sizes of IOCGs and all that, but Newcrest already had the filter that it's only supposed to be really large scale. And here you have from, I think it was Australian survey government that drilled a few holes to just, confirm or get a sense of what the bedrock was like. And this is apparently very, very good science. This is showing that, there's likely IOCG, IOCGs around here. So I mean, you can have confirmation in a sense that yes, this is IOCG country. And then you have, for example, here you have more again like a target area, I guess. I mean, these targets are obviously huge. This is a corridor, I guess, major structural corridor where fluids would have come up. So it's like none of this, because I've looked at maps around this area, and you have a, for example, prospective corridor map here, and I see some juniors put up like where you have a heat map basically about prospectivity, and there's about, I mean, all the claims here, there's no free ground basically. And as far as I understand, Newcrest kind of had first mover advantage, so this is not like they were late to the party and just acquired some ground that was left over. No, that they actually had first mover advantage, and basically their ground is very much prime ground, and they prioritized again the, let's say, biggest looking targets they could find in this general area, and not after the average junior. I mean, if you're a junior, you might, we think there might be an IOCG here. Doesn't matter if it's a small price because we work for a salary, etc. That's not obviously how Newcrest operates. And I mean, you have targets like the Flashlight. I mean, compare that to the New South Wales exploration, which is, as we're finding out, I mean, it's hard to find these needle or pencil porphyries as they're called. But here with IOCG, given that, as the name suggests, iron oxide, might have a lot of iron, etc. So, this targets, which has a funny name, it's called flashlight, and it literally stands out like a flashlight. These are kind of, this at least is kind of a bullseye target, right? You know where you should be putting in a few holes to test if this happens to be what you're hoping it to be. Your physical footprint of a big IOCG system. This is quite junior friendly, right? There's not an insanely large search area. It's just showing up, hey, there's something here, we don't know what it is, but it could be an IOCG system. But and also then, of course, that is in addition, that's the endurance projects. So it's like, this is literally a majors district portfolio. This is a major miners district portfolio that Inflection owns right now. What that is worth, I don't know, but you know that there are 16 targets that appear prospective and big enough that Newcrest thinks any one of these has the potential to be a, let's say, multi-billion-dollar deposit. Do we know that? No. Could be 0, could be 1, could be 2, could be 3, could be up to 16. Nobody knows. But you know that the price is huge. Every one of these cans, every one of these tickets is a Newcrest mining sized price, and that's not hyperbole to say. It's because Newcrest themselves are the ones who generated these targets, so by default they are Newcrest sized. And Newcrest was $26 billion or something like that, and that was at lower gold prices, lower copper prices, and all that. So yeah, it's kind of, the potential is kind of obvious. This is one of the most prospective or high potential grassroots portfolios of any juniors around. And again, that's not pumping to say. It's if you say that's if anybody would say that's pumping, then the retort is, well, why did Newcrest generate these targets? Newcrest is not Newcrest was a major miner, one of the most successful major miners, had one of the best exploration teams in the space, headed by Fraser. They are not looking for a pump and dump. They're not looking to flip some warrants. They're not looking to work for a salary. They make money when they find something really big worth mining, and they identified 16 areas here, or 16 target areas where they think there's potential for a world-class IOCG discovery. And then that's of course not it. That's not the only thing with Inflection. They still have their original land position, which has 4 projects earning in with earnings with AngloGold. And then you have Molong North, which is newly staked ground, and they also got Bell, what is it called? Bell, let's look at it. Bell River project, which is on trend with Cadia. So you obviously, this is enough to obviously have a major involved flagship project. This type, they have these areas here they haven't even gotten to yet, but basically as large of an area, and obviously they, as I talked about before, they obviously know much more about exploring for undercover and exploring for these porphyries as they've learned from their work here, right? So the value of this goes up because the work that's been done here. And you have the Bell River, which comes from Newcrest / Newmont, and they probably don't stake any ground without good reason. So I mean, it's like a buffet of major mining worthy targets and project areas. I mean, you could easily spin out this as Inflection 1, spin out this as Inflection 2. I mean, maybe you could make a junior just on the Bell River project. I mean, the scale is kind of, makes it hard to appreciate, but this is a 20-kilometer scale bar, so this is not as small of a claim package as it looks. I mean, this is larger than most juniors projects, and that's just, one part of it. And of course here there's no overburden, so it might be easier to explore here. And there's probably a good reason why. I mean, it says argillic alteration indicative of preserved lithocaps, so there's already evidence of there being porphyries at depth, porphyry potential here. I mean, of course, again, there's a reason why Newcrest or Newmont staked this to begin with. So, I mean, and then we can look at, actually, let's look at this, for example. This, I put this out a day or so before this recent news. And again, yeah, boredom discount. I mean, that goes back to this, because that I honestly don't know many juniors that have had a bigger boredom discount than Inflection, because there's months of no, let's say, at least drill news, and you can see what happens with the share price, and it's pricing away all previous success and all future or current work, basically. And then a news release comes out and it's like, we have actually been doing stuff, and then a lot of the time the stock price really goes up on that, because it's like everybody rediscovers the fact that this story is very much alive, contrary to the sentiment and contrary to what it looks like, because they're not putting out news. So I just had a fun, because that's a problem sometimes, I guess, with news releases. I mean, here it's me, I put this together, so this is not a company. This is not a company slide. I just used company slides. This is the Trangy target, right? And you can obviously see, I mean, thereafter, here it says calc potassic alteration. That's, getting closer to the, where the higher grade core would be, right? And you can see this hole, that's 25, that's out here, okay? Only hit, what does it say? Weak distal propylitic alteration. Okay, so you're farther away from the system compared to hole 31, where you see this pink calc potassic alteration start to show up. So I mean, the core, the pencil porphyry core is not this way, but it's getting warmer this way. And then you have hole 28 here, which is this one, which hit more, most of it in the actual bedrock was calc potassic, and hole 26, I think, yeah, hole 26, it started off with, some calc potassic, then propylitic, and then ended here with propylitic again. And this one was basically only potassic, right? So again, you have an idea which direction it's getting hotter. Same with this section. This is hole 27, where you can see basically has more. They're obviously projecting in a sense, like they don't know exactly what's going on that way. But here, for example, okay, it starts in potassic, and most of the hole is in potassic, and here there's a lot of propylitic. So again, this is hole 24. So again, it looks like it's getting hotter this way. Looks like getting hotter this way. Looks like it's getting hotter this way. So maybe west or southwest is of, and they've said it as much themselves. I mean, they've pretty much closed it up to the north and to the east, right? From where they've drilled at least. So I mean, obviously this increases. I mean, that's the thing. The more information you have, the more likely it is that if there's something there, you're gonna find it in the next hole, right? Incrementally, because whatever. I mean, before they drilled these holes, they didn't know that it's probably in this area, right? West or southwest. So now they know obviously which direction they should be drilling. So I would think that again, each additional hole has a higher chance of actually being the discovery hole, assuming there is economic discovery to be made here, right? That's just logic, goes without saying. So then we go back to, okay, what happened? Let's see here. What happened to the share price? I think this was 30th yesterday. After this news was out, the share price opened up down on almost no volume, but minus 2.3%. And again, if we just is knowing that there's 16 new Crest Mining generated grassroots IOCG targets within the Inflection portfolio, is that not worth anything? Then one could say, well, it might be priced in, that it wasn't a surprise. But let's look at the 2-year chart, for example. Is that priced in? I mean, it's basically, I think the share price is lower than when they announced that they were getting acquire those projects. So that's bullshit. And then you can say, well, I mean, Trangia isn't, they haven't hit the Trangia yet, so it's like yada yada, they need to whatever find something. It's like, but it's like, what's priced in of Trangia? I mean, I think Inflection offers up a bunch of psychological tendencies by the market that one can use and abuse. I mean, I started buying as soon as I saw the news. I think last news release or the one before, I couldn't believe my eyes that the stock didn't open up. It was like the news didn't happen, that these targets are not real, whatever. But it was pretty, ended up being decent volume, like 450,000 shares traded or something like that. But still, I think the stock price basically ended flat. I mean, it's just incredible. And I think that goes also to show, which I've talked about a bunch of times, again, why is, Lundin Gold recent, I talk, or Lundin Mining, no, NGX, I've talked a bunch of times about, why that the market cannot price in more than one thing at any one point. It can only look at one thing. I mean, if it's a major mining major producer, it usually looks at the cash flow statement, right, which includes, like, let's say 6 to 10 mines or something. If it's exploration or a junior, it's pricing in the flagship asset. That's basically it. It cannot account for it almost always refuses to price in potential, especially across multiple projects. Because you could make a case that, hey, it looks like Inflection is close enough to making a potential new porphyry discovery, just the Trangia, and they would be self-funded up to including PFS, and a PFS would probably cost a few $100 million to make. And if you do a PFS, that means it's probably whatever you're doing a PFS on, in case, in this case it would be AngloGold, is probably because AngloGold think it could be at least worth $2 billion. I mean, that's way down the line, of course, if it ever happens here. But it's like, is 27 million CAD pricing in a high chance of success? I mean, what's the mark? I mean, what are the odds? If they would end up finding something worth $1 billion, for example, if you include a royalty, Inflection would get, let's say, 30% of that. That's 300 million. So one could say it's pricing in a 10% chance that Trangia is going to amount to something worth at least $1 billion. And $1 billion is not absolutely huge, of course. I mean, there's Cadia and Cadia East. I mean, I think it was worth or is worth like $10 billion or something. There's Ridgeway. There's North Park's more like a cluster of porphyry. We don't know. I mean, nobody knows if it's going to be necessarily a North Parks or a Ridgeway or a Cadia East or whatever it might be. I mean, it might be a huge porphyry. It might be a small porphyry. There might not be an economic porphyry. But nobody knows that. That's investing in Schrödinger's cat, especially exploration. We just know what we're paying for anything. At any one time, that's the only thing we know. So we know it's pricing, 26 million CAD. I mean, it's pricing in a very low chance even that Trangia is going to amount to anything. And then you have to include the other targets and projects just within the AngloGold earning. So if it's not pricing in much at all chance of success at Trangia, by default then, if one believes that, then it's pricing in 0% chance of success for any of the other targets. So you're not paying for any of that potential. And by default then, you're not paying for any of the potential out here, paying nothing for this, and nothing for Bell River, and then you don't pay anything for these 16 targets. That's a whole lot of projects to get for free. And then the market's excuse, and the one we probably will use ourselves because believe me, if Inflection would be up 100% on this news item and just would be ramping, people would start to agree with the market in the sense that, yeah, of course, this multi-billion-dollar potential across, let's put it like this. You have 16 targets with billion-dollar potential here. You have multiple targets in New South Wales with billion-dollar potential. Of course, it makes sense that it should be priced higher than 26 million CAD. You would start to, again, nothing changes sentiment as price. If Inflection started ramping, if I had money enough to just push Inflection up to 200% higher, the sentiment would change like that, and people would be okay buying higher, because then they would start to believe themselves that, of course, even though this is high risk high reward exploration, they still have all this billion-dollar potential across the board should be priced in some way, shape, or form, because there's still there's a chance that they might make a billion-dollar discovery or more than $1 billion discovery. But again, since the market has an extremely hard time pricing in anything more than the obvious, let's say, the flagship project, I do honestly think that as the market kind of is suggesting, that it refused to price in anything. None of the, in my opinion, 16 IOCG targets is priced in. That's you're getting that for free. And in my opinion, you could easily make a junior alone out of that, and a 30 million market cap. I wouldn't think that's overvalued, again, in light of the potential. So you're in my way, you're getting that for free, because if you summarize all the potential, and yes, it's potential, Inflection has to have some of the absolute highest blue sky geologic potential of any junior out there. Again, most juniors have 0 new crest mining generated targets. Inflection now has 16 of those. Have I don't know how many in New South Wales in the original package. They staked Molong North for a reason, and this is, you can see the scale bar. I don't know how many targets are all in these. I think they quoted like a dozen targets or something when they staked all this. And then you have Bell River. I mean, it's just insane how much upside potential they have. But then you can say, and that might be what the market is thinking right now. Again, if the market only focuses on one thing, it's like, well, that's great that you have $16 billion cans to kick, additional, but you don't have much money. So there's not going to be any can kicking anytime soon. And if you really want to kick the can, you need money. And if we suspect that you might make a raise, we sure as shit don't want to see the share price go up, because we want in at the cheapest price possible. And obviously, given I mean, there's 163,000 shares here, yeah. I mean, that's not much. Me and the family, I think we own, I don't know, 1.5 million shares or something. I mean, it would take some time for anybody with serious money to take a position in Inflection without absolutely ripping the share price. Because, like, if I had a fund, especially exploration focused fund, it's like, I would call Alistair and it's like, please make a placement. Because I mean, especially if I had a lot of money, it's like, hey, please take my $10 million and you go out and drill yourselves few or several of these targets here. Like the flashlight. Pretty, I mean, a thankful one to test, right? But yeah, so that might be in play. That's like, oh well, you can't really test them yourself, and so we hope that you're gonna make do a placement. But the thing is, of course, that, well, there's no guarantee they're even gonna make a placement. I mean, there's a bunch of things, because that's basically being, in my opinion, overly greedy, how the market is. I think it's a combination. I think it's both that, and I think it's also the fact that the market can't price in a lot of stuff. Because again, if you just accounted for, okay, what's the potential here? Even if you, let's say it cost you $10 million to test some of these targets, or many of these targets. Let's say you could test 8 targets with, okay, in a somewhat proper way, test, or get an idea of, like, let's say 8 targets, and these are all $1 billion targets for $10 million. I mean, it's like, I don't know what the expected value on that 10 million is, but if you can kick 8 cans, even if the probability of success for any one is like 5 or 10%, that's still, if you get 8 kicks and the price is, $1 billion, for example, that's a hugely positive expected value campaign on that $10 million. So, you would be happy to do that. But okay, going back to my original point. Oh shit, I'm already up to 1 hour. Jesus Christ. Okay, I might actually have to talk about other companies later on then. But they also obviously have the option to do another earning, and they're earning with AngloGold's one of the best earning deals I've ever seen. Fully funded up to 25% plus feasibility study plus, including a pre-feasibility study plus a royalty. So I mean, if you compare that, when you think, well, we don't have 100%, exposure, for example, in those targets. The thing is, and I covered this a long time ago with Inflection, that of course, when you think, oh, we're getting fully carried to PFS, 25% plus a net smelter royalty, let's say 30 to 35% project interest, because rule of thumb is like 1% NSR is like 5% project interest. So let's say you would be fully funded to get to 30 to 35% project value. And then you compare that, well, you own it 100%. And people think that, oh, you're giving away 70% of the upside. Well, that's the wrong way to think about it. Because 100%, if you think it's going to be 100% effective interest, then you're assuming that there's going to cost $0 to actually explore it. I mean, if you look at some success stories, and even take one great one, I would say, is like Osisko Mining. They got sold for, what was it, $1.6 billion or something. They actually, to be honest, they also, let Goldfields earn in. But the thing is, like, that was $1 billion sale. But if you look at the share price for Osisko Mining, it didn't turn out to be that great of an investment. Why? Because it cost them so much money to prove up the damn thing, so they printed so many shares that at the end of the day, even if the value went up 20-fold, the share price sure didn't go up 20-fold. So original investors, after all the dilution, might have whatever, I don't know exactly how much, but it's like, it's sure as shit wasn't 100% appreciation correlation to the actual value creation. So it might, imagine this. Let's say you have something 100% owned, and you're exploring for big targets, and the price you find is going to be worth $2 billion one day. But it cost you 300 million to get to that stage, for example. You have to find 300 million, and that's 300 million in stage dilution. Or let's say you get a market cap of $1 billion and it costs you 200. Take Newfound Gold, for example. I think they drilled I think they spent like 200 million or something on drilling, maybe, I think around that maybe. And for a while there, they were down to, I think, 400 million in market cap or something. Offshore, they at the time didn't prove up. The resource was a disappointment and all that. But my point is that fully funded, if you get up to 30% fully funded to PFS, and to get to that stage yourself, you would have to put up 300 million. That's $300 million less dilution compared to if you owned it 100%. So $300 million in dilution, that's going to eat away probably, let's say it eats away at least 30% of the upside. So it's actually then, you compare 30% interest to 60% interest, but you're taking obviously a huge amount of financing risk and all of that. So it's a much better deal than you think when you have that much, when you're carried to PFS stage for a New South Wales type pencil porphyry exploration target. So then the question is, this is one of the, if not the, in my opinion, cheapest pre-discovery junior in the entire space. And yes, that's based on potential, but if you do some probabilistic assumptions, for example, that, okay, assume you get to kick 10 cans. If it's 10% chance of success per can, on average you're gonna find one success, right? And the odds of failing 10 kicks at the can in a row without finding anything, I think that's like 35% chance statistically. So then it's like a 65% chance of success. If it's 5%, well, it's like, yeah, whatever, half of that. Um, and nobody knows, of course, what the I'm just like trying to look at it in. I mean, what are the odds that if you test all these targets, you're not going to make a significant discovery? Let's say it costs you 50 million to if you're alone to test all these properly, and that might be way too much to get a good sense. 50 million, but if the price is like 1 to 2 billion, for example, and if you think, well, let's say 5% chance success on any one of these targets to find a Newcrest sized deposit, and if it's Newcrest size, again at least a billion, let's go with 2, and if you just do some probabilistics on that, then it's like, okay, what's the risk or chance of rolling snake eyes 16 times in a row with a 5% chance of success? It's actually lower than you think. I haven't actually done. Let's see. Let's do. Okay, let's do 0.95. 1 second here. To the power of 16. If I haven't made a mistake here, that's 44%. So if we assume just a 5% chance of success per target here, if you get 16 targets to test, and again we just assume a 5% chance of success, there's a 56% chance you're at least gonna have one discovery. And when you think about it that way, okay, what is 56%? How do I? 1 second. How do I? Okay, 56% chance. Let's say a $1 billion, and we're not talking even a world class in that. No, let's go with 2. Okay, 0.56 times 2,000 million, which is 2 billion. That's $1.1 billion in expected value, which sounds absolutely crazy, of course. But even if we do let's do that with an earning. Let's say that they get another deal going. So let's say the price is $2 billion, and you for any one of these targets, and you only have 5% chance of success. So we take 1.1 billion and multiply that by 30%, 0.3, their carried interest. That would still be 336 million CAD in risk-adjusted value, not accounting for time value of time, but it's not also accounting for the fact that a lot of people think the copper price is gonna go up a lot, and it's not accounting for an even bigger price, for example, or multiple prices or anything like that. That still comes out to 336 million CAD. That's, yes, more than, obviously, that's like 15 times the current market cap. Is that outrageous? I mean, again, I just listed the math, so anybody can come up with their own math, but I just listed the math. If I assume, let's say you do an earning with someone up to 30%, let's say 25%. Oh, well, actually, somebody, Newmont owns the royalty. Maybe that can get bought back. So let's do 1.1 billion or 1.12 billion times 0.25. That's 280. So that's pretty much 10x. That's from a risk-adjusted basis. Obviously, yeah, risk-adjusted basis. So that's how I like to think about inflection. That is why it's, in my opinion, because let's face it, if Newcrest Mining generates 16 targets, those targets are worth being tested. It's not Joe Schmo, it's not a shitco, it's not me who's coming up with these 16 Newcrest targets, it's Newcrest Mining. So obviously you would rank these types of targets some of the highest. And if you only, again, since it's grassroots and all that, you only give it, and I wouldn't say that's too much, you give it 5% chance. Otherwise, I mean, if you're a Newcrest team, I mean, would you even stake targets that you inherently inherently think has below 5% chance of success? I mean, how shitty must those targets look in that case? So I think 5% is fair. I think it might even be conservative. I don't know, but let's go with 5. And that again is not accounting for the fact that maybe Newcrest is hoping for more than 2 billion price. They're maybe hoping for a 3 or a new Olympic Dam, which is more than that. Still, you come up with 10x of the current market cap just from this portfolio alone, assuming $2 billion price on average, 5% chance of success, 16 targets, 25% fully carried interest. The share price, as we saw, moved 0 basically on the news. There's also obviously let's put it like this, to play devil's advocate, since this is all potential, including Trangi, including Ningen, including Crooked Creek and all that. Is there a chance that or a risk that Inflection does end playing the AngloGold joint venture through, any other exploration efforts in that part in New South Wales through, with 0 success, and they do some deal or drill this themselves and 0 success? Of course, that's a possibility, even though statistically, even if you assign every single target 5% chance of success, even if you get down to 3 or whatever, with the amount of targets, statistically you're probably going to make at least one discovery with that many targets. So yes, and I've seen some posts, for example, that apparently AngloGold, I think they walked away from some Argentinian earning or something, and they said, well, this does not fit with our grassroots exploration strategy or something anytime soon. And maybe again, we're gonna find reasons to be bearish at lows. That's just how it is. When something is cheap, there's always something to be bearish about. 100%. Again, sentiment follows price. And at the same time, we don't know. I mean, maybe AngloGold is going to push it even harder here. I mean, Jeff Phillips and Rick Rule got into Kincora not too long ago, and they have less of a land package in Australia, worse, in my opinion, project portfolio. And I don't know it that well. I just know, the sheer size of the land package that Inflection has, the people, and obviously when you include these targets, hands down, I would say that obviously the total portfolio is more perspective than what Kincora has, and Kincora has worse deals with Anglo. And Kincora has a market cap of, I think, 43 million CAD, so it has 70% higher market cap than Inflection. How does that make sense? I would say it doesn't make sense. I'm not saying Kincora is overvalued. I don't think Jeff and Rick Rule would buy into it if they think that was overvalued. I just think it's another data point to show how absurdly, on a risk-reward basis, how absurdly cheap Inflection is. Because what I like about Inflection is that they need to be lucky once. From this market cap, if they're lucky once, I and anybody else could make a boatload of money. They need to be lucky once for Inflection to be a potential 10 plus bagger. And there's also a possibility, we don't know, but that's the possibility. We just know what's priced in. But there's a possibility Trangy becomes a discovery, they make another discovery at Crooked Creek or Ningen or Duck Creek or whatever it might be, and they make one or two discoveries here as well. That's not out of the question. Maybe they sell some success, spin the rest out, and keep going, yada yada. It's going to be extremely interesting to see what has happened with Inflection 5 years from now. If we go from today at 26 million market cap to 5 years and they still haven't found anything, I expect to be down maybe 50%. I mean, depending, they're insiders own a boatload of this company, so they're probably just gonna keep going, generating new ideas. So I have a hard time seeing the story being over anytime soon, even if they come up with snake eyes across all the known targets that they test. But also there's a scenario that within 5 years, and 5 years, a lot of exploration could be done in 5 years, right? They might have a proven discovery and two maybe incipient discoveries, as Quinton would like to say. That's what keeps me. It's like that's why I'm so excited about Inflection. It's not that I know I'm gonna get a 10 plus bagger. It's the fact that at this price they wouldn't need that. I mean, the upside is so large relative to the prices they are looking for, that if one of these hits, that could be an extreme re-rate basically. So yeah, that's what's so hard, I think, about these stories to explain in sense. To me, this is an absolute high risk, high reward on paper, no brainer. One of the most absurdly asymmetrical, diversified to the upside cases that I possibly know of. I don't know any single junior with this kind of land position at this price, and the sizes of these prices, the quality of these targets, the quality of the people who have come up with these targets. This is pretty much almost unique in my book. But the difference is that a no-brainer to me, especially in a pre-discovery story, a no-brainer is not, there is no doubt you're going to make a lot of money on it. That's not the same thing. I don't have 50% of my portfolio in Inflection. It's one of the largest, it's the largest pre-discovery story in the HODL folios. That's simply because I think you're getting 3 to 10 worth of junior projects, 3 to 10 worth of junior upside in one company, and you're paying for one company. Because again, if there was a junior that had this land possession as their only flagship project, 30 million wouldn't be much at all. Absolutely. I mean, it goes without, somebody pitches you, hey, we acquired Newmont/Newcrest untested first mover advantage IOCG exploration portfolio in Australia. I mean, that alone would be one of the coolest juniors around. Then you add the other project packages, and you could have easily 3 juniors with some of the largest exploration upside of any junior, especially, I mean, in the top 5% each. and you have all that in one company. So it's absurd. This case is absurd. It's a one of the most unique cases that I know of and ever seen, and it was already pretty unique with their original land package, and they've tripled that. So again, just because it's a low market cap junior, it's low liquidity and all that. And again, I mean, I just want to reiterate this. I'm not. To me, this kind of no-brainer is not saying that there is 100% guarantee you're gonna make money on Inflection. To me, it's like there's almost 0% chance I can be overpaying for this upside at this price, this upside potential at this price. Um, and I actually think, even though we haven't had the big share price move yet, and we haven't made the like hands down discovery, even though I mean I can here 54 meters of 0.36 gram per ton AU and 0.07% copper. I mean, obviously this is very encouraging, because again they know it's getting, well, it seems to be getting harder this way, and they're already hit something like this, as where if you had a bit, let's say, higher grade, but you had like 400 meters or something of this stuff, all of a sudden you have a major discovery hole. That's the thing when coming back to the fact that the market might be like, oh, okay, well, you're probably going to need to raise money, or the market thinks that, and even though I think they could relatively easily farm out any of the 100% owned projects. I mean, the deal they got with AngloGold is a great deal, so I guess it comes down to that stuff. And my point is that that's a lot of assumption. There is no assumption right now that Inflection is going to do any kind of discovery anytime soon, or do another deal, or anything positively at all happening basically anytime soon. That's what priced in. That is what's priced in. So yeah, so it's just, in my opinion, there's so many risks to the upside, and obviously, just if you look at the geological potential, it's absurdly, in my opinion, undervalued. If you account for, again, if you even account for every single target they have having just a 3 to 5% chance of success, but if that's to be tested over the next 5 years, I still think it's basically, let's say, a coin flip that they're at least going to make one significant discovery, and from this share price, that's some big revaluation potential. Obviously, I mean, we know the Javieron discovery by Greatland Gold. I think they had 30% interest in that. They ran up to $1.3 billion at their peak with a minority position in a discovery in Australia. So yeah, again, I don't want to arm weight too much, but yes, there's some significant upside potential in Inflection. So the amount of, and of course, again, as we saw with Javieron, for example, even though they're buying it back now, but that's one discovery. That's one legitimate discovery. Inflection has a shit ton of targets to test. So yeah, it's almost unique, and it's hard for me to say no to. Well, I just love the story, and lastly, I think it also has played out. I mean, the original thesis was that Inflection has so many cans to kick that you basically can't kill the story, and that's what we've seen. Sure, the share price hasn't, if we look at 2 years or 5 years or whatever, I mean, it's kind of been, let's say, stagnant since 2021, right? That's a long time period, right? But at the same time, the story is very much alive. It's actually, the story is bigger than ever. And we've had, again, we have had shots. I mean, any one of the holes they've ever drilled could have been the, let's say, the breakout discovery party, right? So we had all those chances. We haven't had that outcome yet, and still the story is intact, and maybe even better than ever, probably better than ever. So that's actually a case that hasn't really paid off yet in a big way, and we don't know if it ever will. But I think it shows that the thesis was sound. That you're just getting, shots and shots and shots, and even if you let's say have taken a lot of shots and no one has hit, a slammer yet, we're still be if you hold for 5 more years, you're gonna get more and more shots. So I think this, even without the discovery, let's say, yet, I think this has been a very success. I think the thesis is pretty much been correct, and it's probably gonna keep being correct. And in 5 years from now, if they have still not made a significant discovery, but they got to kick a lot of cans, we can say, I think, that, whoa, okay, I got like 10 years worth of billion-dollar shots, didn't pan out, and who knows, 5 years from now they might still have new targets to test and all that. So that's the beauty of it, I guess. And of course, we know that any one of these holes could also be the long-awaited discovery hole that, yeah, who knows? I mean, fingers crossed, basically makes Inflection one of those stories we're going to read about one day, and it's like, okay, and be talked about as one of the big exploration success stories. Because make no mistake, I mean, from this market cap, given the elephants they're hunting, this has some, again, serious revaluation. Oh, Jesus. Serious revaluation potential. I mean, if we just use Javieron as an example, they have 30% interest with the royalty. Inflection would have around 30-35% project interest in a sense. I mean, if the upside is, if they would, get a Javieron type hype and a Javieron type discovery, there would potentially be no dilution up to a peak, and that might be a overhyped peak, but a $1.3 billion, and that's obviously way beyond a 10-bagger in that case, and that's from one discovery. So it's, again, it's like, I have no idea. In 5 years, I think in 5 years, either I'm gonna be up a shit ton from these levels in Inflection, or I'm not gonna be up at all. Maybe even down 50%. That's it. That's what makes it terrifyingly exciting. And yeah. Anyway, I have to cover other companies later because it's this rant has gone on too long. I was gonna cover like 6 companies. Thanks for listening. Of course, I'm very biased. Me and the family own shares of this. Inflection is a banner sponsor. Again, not buying or selling recommendation. I reiterate, I don't know if anybody's gonna make money on Inflection. I'm not all in Inflection. I'm not putting all my eggs in one basket, etc. I'm just saying, basically what I've said. It's like, I really like the risk reward in Inflection. Don't invest money you cannot afford to lose, all that. Again, I'm biased. If you think, if you're afraid I'm using anyone as exit liquidity, don't buy the stock. Okay, thanks so much for listening. Bye.